Hi, everyone. This is Jason Bierk of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He has a long and well-known career on Wall Street since the mid-1980s with neither a formal education or training. He got promoted at his Wall Street brokerage firm to head of investment strategy. He ran hedge funds. There was mutual funds in his name. His best-selling book is Confessions of a Wall Street Whiz Kid. Peter Grandich, thank you for joining me again.
Thank you, Jason, for having me back.
Now, Peter, you have a very, very long bio. We'll attach a link to it in the information description section. So rather than reading off your bio and all your accomplishments on Wall Street, I'd rather just ask you a bunch of questions that my listeners will get a lot of information out of.
Well, that's good because if you ask me about my negatives, it's a lot longer than my bio.
Well, actually, let's talk about your time on Wall Street when you were a hedge fund manager. These trades, like these leverage trades, like the yen carry trade, the leverage short volatility trade, were hedge fund managers doing these things back then, back in the 1980s and 90s, or is this more of a phenomenon since 2008 to now?
When hedge funds were originally created, it was supposed to be one of the first unique ways to play the short side of the market. Understand this, a contrarian fund, the first one came out around 1990. Up until then, there was no regular fund or a vehicle that was made for the investing public to be short the market. So the argument on hedge funds was that when the time came right, people could be negative or at least hedge their bets. And all they actually did was end up collecting money with a 20% profit, taking the 20% of the profits, still getting a 1 or 2% administration fee, which now people basically work for as their entire fee. And as soon as a hedge fund had a bad year, the guy closed the fund. He just went and opened a new one. The whole idea was supposedly if he had a bad year, they wouldn't charge you if you made the gains back to where you'd be even, but they realized they couldn't make any money. And the hedge fund game, really what it originally started out for, especially when I started with it and what it became, is two different things. But to answer your question is there is so much leverage in Wall Street, in derivatives, that it really, in a sense, you have to make it and think that it's too big to fail because once that domino falls, there'll be no stopping it. And, we've come close to a few times. People don't remember, Jason, and many of the people giving financial advice now weren't even born during the crash in 1987. But we came within an hour of a total meltdown. And that second day after that decline, still almost two-thirds of the Dow Jones Industrial Average stocks did not open. The market was down another few hundred points, which at that time was big because it was only around 1,700 at the time. Mysteriously, the Chicago Board of Trade closed its S&P 500 futures pit, but a small trading contract was done on what was known then as the Kansas City Board of Trade. And within 13 minutes, around 1:30 to about 1:43, 13 of the biggest and known financial service firms all decided at the same time to go long the S&P futures on the Kansas City Board of Trade. And that caused all the program selling to flip to become buy-in. They were able to open all the 30 Dow stocks, and we finished up like 170 points that day. But we were that close to a total meltdown. And leverage now is 100 times more leverage than it was back then.
And Greenspan panicked back then. I think I've heard the stories that Alan Greenspan had to change his travel plans and his flight plans, and he had to fly back to one of the Federal Reserve Bank headquarters and start manipulating the market higher. They were that worried in 1987.
Well, Jason, I believe yesterday the plunge protection team came out of the woodworks. We were down 700 straight down points after the debate. The mood and talking among institutional chatter was that it looks like Harris could actually put, this was the thought at the moment, Harris could beat Trump. It's really bad for the market. And suddenly, we saw it again. We saw the futures suddenly rocketed up equal to a few hundred Dow points in a minute or two. And that drove the market all the way back to the plus side. And of course, they talked about the big Navier, the guy said something about how, this is amazing. You got a CEO that sold hundreds of millions of dollars of his stock while he's telling everybody our customers are so anxious. They don't even know if they're going to be able to get all their supply. And he sold another $58 million worth of stock this week. I mean, but to get
That's
back
the CEO of NVIDIA.
the video, yeah. And here's, yesterday that was part of the reason why supposedly the market turned and all that. Listen, here's the bottom line that people need to know. When such a small group or one theme is really the difference of something going up or down, it can't last. It's like bottle rockets. If you remember as a kid, every once in a while, a rare bottle rocket acted like a Roman candle and it kept going. But they pop and they come back down pretty hard. And that's what the market is being set up for here now. I don't know what thing it's going to be. I think some of the things, and I don't want to go off, I know you have specific questions, but I think the complacency in Wall Street now is at the highest level given fundamentals that it's been in the 40 years that I've been in the business. There's just an assumption that despite all difficulties, socially, politically, economically, here and abroad, this don't worry, be happy crowd that makes up the lion's share of the financial service firm is just ignoring these things as if it's not possible if any of them could turn bad.
And they're also trying to spin it that the Fed rate cuts will be 100% guaranteed bullish for stocks. We don't know because in the past financial history, normally when the Fed starts to panic and does a 180 on policy and starts to cut rates in the short term, that could be bad for stocks. I think there's a lot of red flags here, Peter. I think it's very similar. You talked about 1987. The first too big to fail hedge fund was long-term capital management, and then the Fed made the mistake of bailing them out, and so did the Wall Street banks. But we've seen it like every couple of years, really since 2008, whether it was Bear Stearns, Lehman Brothers, Credit Suisse, Deutsche Bank. It seems that these large banks in the US or Europe or other countries always have problems every few years, and then the rules are changed to save them, and we never actually find out the truth.
Well, anybody that ran a pyramid game knows that when you start to see things go bad, the only saving grace is to get more capital to pay the old people and keep the game going. The Fed realizes that now, that these banks have become so overwhelming and so, in a sense, almost little countries themselves. And keep this in mind, and this goes back old school, and only the few hard asset people that are left from the 70s and 80s will understand it and all. But the Federal Reserve was created for the bankers, not the banking system.
Yeah, and hedge funds now. I mean, like did you see in April there was a Bloomberg article about too big to fail hedge funds? And I'm just scratching my head, like, why are they warning us back in April that there's too big to fail hedge funds? And it was an article on Bloomberg.
Well, it's the only thing that's troublesome now for those type of people is more and more people are not relying on mainstream media and for all walks of life, including financial. More people now are looking to people that are not part of these networks. I mean, somebody made a point, I think it was Peter Schiff or something today, and it was valid. He said, here's gold going to an all-time high. It's outperforming stocks, and he's why I don't know why he does it. I wouldn't watch 30 seconds of it, but he's watched CNBC all day and nobody's mentioned the gold price. Well, they will always treat it like kryptonite. It flies in the face of what their sponsors and advertisers make money on, and that's financial assets, stocks and bonds.
Yep, or whatever tech stocks going up. You were talking about churn, so they want to sell whatever can be traded a lot. So if it's cryptocurrencies, those can be traded in and out of. If it's Nvidia stock or Mag 7 or even stock options. I mean, I was watching Fox Business for an hour or so a few hours ago. We're recording this interview, by the way, on Thursday, September 12th, 2024. The gold price popped substantially today. It hit $2,560 for our listeners out there. But I was watching about an hour of Fox Business, Peter, and they advertised for stock options trading just nonstop in all the commercials.
Well, here's an example. I will use this guy Larry from BlackRock. He spoke so negatively about cryptocurrencies. And then suddenly he made a 180 and he says it's the next big thing. Everybody has to have it, et cetera. Of course, his firm happened to come out with really the first well-traded ETF for them, and they're making tens, if not hundreds of millions of dollars off of that. And my only argument to Larry Fink is, nothing changed in that technology, nothing in what it was employed for when you disliked it. But if you really, really like it, Larry, why don't you just take your compensation in Bitcoin? Why are you still taking it in dollars? You want to impress me? Take it all in Bitcoin. And but listen, every every era going back a couple hundred years in finances, there's always something that people get caught up in. Okay, and some people timed it right. I'm not to say that there won't be any type of crypto 5 to 10 years from now, but I can tell you this: what isn't spoken about, the trillion or maybe up to trillion and a half now that's been lost among different cryptocurrencies that have come and gone and scams and all that type of stuff. And, no one talks about that and all. And people used to throw guys in jail in the 80s and 90s for what they did with penny stocks. And those guys are harmless compared to some of the promises and comments. I mean, how can you start telling people you think something's going to be $5 billion in 2045 when it hasn't even gotten to $100,000 yet? Yet this is the type of stuff that just goes on, and it's the public. I hate to use the word, but they become the bag holders. And this is how it's always been, and I don't see any reason now how it's going to change anytime soon.
Yeah, you're talking about the 1980s Wild West there, what with the Wolf of Wall Street there, Jordan Belfort selling pump and dump on some of those penny shares. I mean, we have our top performing hedge fund manager now is in Congress. It's Nancy Pelosi. I just saw a graphic. She's outperforming some of the top hedge fund managers and Warren Buffett 2 to 1 on her annual returns now.
Well, what's really interesting is the timing of some of her large purchases, and then news comes out not too long after where a significant reason for that news event was something that went through Congress. I mean, you have to be Einstein to figure out what's happening. She's not alone. It's done on both sides of the aisle. I mean, how do you have these people, this woman AOC who came in as a bartender, and so I don't know how many years she's there, 6, 7, 8, and they say now she's got a worth of 12, $14 million. I, I don't know. I mean, can you get paid that much for speeches? I mean, it's kind of crazy, and the whole system is totally breaking down now, Jason. It's socially, politically, and economically at the same time. That's why, for the first time in a 40-year career, I became so concerned that I said, "Hey, we got to build a financial ark. It's going to be very challenging a few years out if God still has us on this earth to everyday life." And people are just totally, totally unprepared for it. 65% of Americans are working paycheck to paycheck. How can they even bother to watch the retirement commercials that the financial service runs? They're never going to have it. We got a government that people say, oh, it has 35 trillion. You're right. Oh, it's heading to 50 trillion. No, the total debt is about 165 trillion because of all the entitlement issues and things that are still people are expected to be paid on. And that doesn't even take into account state obligations to pensions, corporations that are underfunded pensions. This whole retirement scheme is going to become a really pretty horrible point. And then you got the immigration. And at first, everybody recognized it and was bad. But now people are seeing the fallout from it, the crime, the different ways that these people are living and killing the pets because that's how they used to. That's how they survived wherever the countries that they came from and so forth. And then the big thing, Jason, and this one I don't know when we last spoke, but to me, it's going to be the biggest thing that Wall Street blew in the modern era that they didn't pay attention to. And a few years from now, people are going to be saying, why didn't you tell us? And that is what is transpiring with these BRIC nations. We now have 50 of them, 50 ready to go full throttle, become fledgling full-time members in it, moving away from trading with the United States, moving away from using the SWIFT system or any of the US monetary vehicles, creating their own. And I asked every young financial advisor I speak to who tells me when I give this talk, you don't know what you're talking about, old man. If they were dealing with us in the past trading, and now they're not going to be trading with us, tell me how that's beneficial for the United States. And they hum and horn and they walk away. And I think the BRICS and what is happening to BRICS, especially come this October, when I think we're going to get a real insight to how they're forming their currencies and how they're going to be combined with gold in order to enact trade and commerce among themselves. I just think it's going to be something that Wall Street's going to, a few years from now, basically try to hope that people have amnesia and realize how much they missed it.
It also sounds like these young financial advisors you're speaking to, they haven't read or understood what Triffin's dilemma is, and they haven't seen in the last couple of years how much the other central banks and governments outside the G7, instead of recycling their trade surpluses and foreign exchange reserves into US Treasuries, Peter, they're buying enormous amounts of gold tonnage each month. If you look at they're basically dollar cost averaging these non-G7 central banks, and they've increased about double the amount of monthly gold tonnage purchases since those Russia sanctions in 2022. It's obvious for anyone who actually looks at the data.
Well, the key was, and you bring up good about the Russian, because that was the straw that broke the camel's back for these countries. We can look at a lot of different ways the United States has acted. We can even look how we left our allies flat-footed in Afghanistan. But when we froze the assets in Russia and then took the income from those assets and gave it to the Ukrainians, not only did that forever PO Russia, but think about it. If you're another country, how could you not say that? How can the United States not do that to us one day? And now, we're just, even Trump talking about 100% tariffs against countries. History has shown tariffs never ever work overtime. One of the worst economic tools to be used. And so that's only going to encourage more countries to move away from the United States. And the United States doesn't have the influence to keep those people in check like it used to. So again, this goes to that and one other key reason, Jason. I think this is critical. People would expect, average Americans would expect that if any of these issues that I spoke about, or the crime, or other things that we didn't get into, you would expect that your politician can get together and hopefully fix the issue. Right now, Democrats and Republicans can't even go in the same room with each other. And on top of that, they have fractions in each party that's moving away from their center. So when the
Two different realities, yeah. It's like two different they view the world in basically two different realities almost at this point.
And when it hits the fan, we were going to expect, like if you remember in 2008 when they huddled and Bernanke and all, and Wall Street got together, and people forget this. This is a very, governments have always been grateful that people have short memories. When QE1 was announced, when Obama and Bernanke, the man who said that we weren't even going to have a financial problem, then we had it. It was on the basis of infrastructure, that much of the money that was going to be printed and to save and turn around would filter into rebuilding America. Well, the problem was most of the money stayed on Wall Street. It didn't get to Main Street. And the QEs after that did the same thing. And it gave a lot of liquidity and gave an appearance of it's pretty easy to make money in financial assets. And it was. The problem is you can't just keep printing another 5 or 7 or 10 trillion dollars if we have another crisis, because we're already on the edge now. And as you pointed out, foreigners are net sellers of our debt. They're no longer primarily net buyers of our debt. And eventually you can't keep printing money just to keep buying debt or the same paper, pushing one type of paper to another paper by the same people that are printing it. And that's where the issues are coming from. So I'm not so concerned about what the market's going to trade tomorrow or next week, next month, or even next year. But anybody that has a 3 or 5 or 7 year outlook and plans on still being living here and all, how's the government going to be at a point where if it has to pay almost half of what it takes in taxes to pay its interest, how are they going to provide the services that you're expecting or you got used to? Governments can only do two things. They can cut services and they can raise taxes. And that's what we're going to get both of. We're going to have a lot less services and we're going to have a lot more taxes.
Well, or they print money and they lie about it. So stagflate, tax lie, some type of debt monetization. They could hide the US Treasuries that are purchased. They could lie about the money supply. They could hide it in the banking system. They could force people. I mean, they did this with war bonds in prior wars where they forced people to buy government debt and then they inflated the debt away. That's a common theme throughout financial history. But I think you nailed a common macro theme here. Outside the G7, Peter, you're going to see these governments and central banks. They are not going to be large net buyers of treasuries. And it looks like they're going to be slowly dollar cost averaging gold tonnage. That seems to be where gold is replacing treasuries.
I'll tell you the other thing that isn't being spoken at all about yet. It's probably what the BRICs were 3 or 4 years ago. And that is, to me, is going to be the breakup or the lessening of unification of the European Union. They got to think about this, Jason. You're old enough. back in when I entered the brokerage business in the 80s, Germany was a powerhouse. They were an economic powerhouse. Now they can't even turn power on. I mean, it's really,
Because the ESG, yeah, the green energy stuff.
yeah, it really has gotten very, very serious. And the first person now in Italy is talking about, maybe it's time to move away from the unification and all, because the other issue, of course, that's overcoming them, and it's overcoming in the US. And I think people are missing a point about that in this immigration. Because the Western world is seeing negative population growth, the natural change is going to be the Western civilization, how we got used to it, is going to change, and it's going to change away from what we're used to. This is something that just saying, oh, put them on a bunch of boat and send them back is not going to solve the issues. Part of the reason, it's not the main reason, but part of the reason these immigration things are being accepted in the Western world is because of they know they need more population, a tax structure to come from. Now, of course, here in the US, I believe it was also done because they believe they can manipulate them to vote for a certain party, and that will keep them in power. These are issues that are not considered by just give you a real quick example. This is a real pet peeve of mine. It wasn't too long ago, within the last 2 months, I was asked to go speak to a bunch of young advisors. In fact, nobody in the room other than me was over 40 years old, but they were all licensed financial advisors. And I said to you, in a few minutes, I'm going to talk to you about a very important thing for the markets, the BRICs. And the kid in the front leaned over to the kid in the second. He says, he's going to talk about the housing industry. I mean,
You
they
mean
didn't,
like bricks and mortar, he was thinking?
yeah, they didn't even know. They didn't even know what the BRICS was or what it would mean and understand. But I can tell you this, they had a surefire 5, 7 minute spiel where the average person who doesn't know much about finances could really think they know something. And this is the problem now. This is an industry that's basically has a generation now that's learned to drive on a one-way street, Jason. Yeah, we've had a couple bad quarters, maybe even a half or 9 months. But there's never been a period of time where for year after year after year, you couldn't just make money because things didn't just simply keep going up and up. And 7 to 8 out of 10 families that I still see in our planning group, from average workers all the way up, although I don't deal with athletes anymore, they're all living at least one lifestyle above their income. Everybody says, how do they do it? They do it through debt. That's why their mortgages increase. That's why they have more car loans and car leases. That's why they're not contributing to their retirement plans or taking advantage of, because they need the money now to live a lifestyle above where their income is. They have negative cash flow. And I always go back to people and I says, you have to have positive cash flow. You have to make more than you spend. And that hasn't been the American way for quite a while. And it's part of the reason we've gotten into such a problem now that we have with debt. Debt is the dirtiest four-letter word. It's worse than anything you might have said as a kid. It's here. It's choking us. It's choking us not only on the federal level. So many states are underfunded. Look at California. How are they going to balance almost 60 something billion dollars is their deficit? They don't have a printing press. And what's happening there? People with real money are getting out. They're passing laws now that even if you try to leave, they can tax you on the way out. It's just, listen, it may not be tomorrow, and more likely it won't be tomorrow. But if you have a 3 or 5 or more outlook and you don't take some of these issues into some type of planning, you are going to be in a few years up the creek without a paddle.
I grew up in California. Actually, I think they're talking about like some type of clawback for 5 or 10 years if you leave. If you do business in California, like if you're a pro athlete and your team played there for a couple weeks or a month or something, I mean, the state of California has tried to send you a tax bill. So that state is kind of ridiculous with the way they go after a lot of high net worth people for taxes.
It's not alone there. Illinois has a huge problem. The state that I'm in, New Jersey, there's a few others. And what's interesting is some of the powerhouse states that were the opposite, Texas and Florida, many of the left side of the thinking who have money are leaving those states, going to live in those states, and are going to change politics down there too. I try to sit here and try to say, okay, how could this not happen? And I can't. It's going to happen in some fashion. It's either going to be bad, worse, or the worst ever. It's going to be one of those three things.
Well, unfortunately, a lot of adults don't learn from their mistakes. They tend to repeat the same mistakes and just blame other people for their mistakes.
That's what a New York Jet fan does.
You must be a Giants fan then.
I'm kind of not really anymore, Jason. I worked with athletes for 20 years. Listen, for opening night, I hope you don't mind me sharing this, opening night, which they do at every game, but they actually showed it on TV this year. They played an alternative national anthem. Uh,
What does that mean?
it's the social wokeness has gotten to the point where are we going to now say that there's an alternative group that is deserving to be on equal par with our own national anthem? And if so, I had said to the few Hispanic baseball players that I knew when this started, I said, you guys, you're more of a minority in Major League Baseball than any other minority. I think you guys should ask for an Hispanic national anthem. They got a black national anthem. Yeah, but it's all part of this social erosion that's being impacted by the politics that's being practiced as the money is going. Jason, I never, ever, you talked about being in this 40 years. I never, ever, ever thought we used the word trillion in anything in finances in 1984 when I entered the business. In fact, when I entered the business, we had less than $1 trillion in national debt. And now we have 35. Congressional Budget Office says we're going to 54 in less than 10 years. And they base that on no major recession between now and then. So if there's a recession, there'll be even more debt. Let me ask you folks that are listening to your program, just think about this. Just take 50 trillion. There's 50 trillion debt, and it has to be refinanced. And they just refinance it. 5% is not a high interest rate. That's $2.5 trillion in an interest expense. The best we've ever done as a country is 5,300,000,000,000 in income and taxes. So even if that goes to 6 or 6.5, we're still going to be looking at almost half of all income going to just pay interest expense. Listen, that doesn't leave much room to take care of everything else. So government services, military, all the way down to simple programs, they're not going to exist. They're not going to exist in the way that we got accustomed to at a time when our population will be older. It'll be in more need. And then no one's talking about another issue, and this is going to pop up. We only see it every once in a while, but we don't realize how serious it is. And that's the breakdown of infrastructure in America. There's been studies done by these major engineering associations and everything, saying that almost 50% of all bridges that are over 20 or years older are in difficult shape and are going to need major repair. We see that in New Jersey here. There's something like 200 and something bridges they feel that within a couple of years they're going to have to shut down because it'd be unsafe to go over them. But these are all the things that the don't worry, be happy crowd doesn't take into account and doesn't do in their planning. All the planning I see done is with plan A. There's no plan B. And anybody, especially when I worked with the Giants for 13 years, the coaches, when they had the game plan, they already had another plan that they would flip to even before they would get to halftime to go over it in case things really didn't start the way they thought they should in the first quarter. And yet most people just have the best of plan. They don't have anything if not the best scenario works out. Again, I can just tell you this, Jason, in my planning business, between this and putting my faith on my sleeve, maybe 1 or 2 out of 10 people want to hear what we just discussed. The rest rather not hear it.
Well, people shouldn't have faith in either political party or the government at this point. I mean, you talked about infrastructure. I've lived right outside of Washington, D.C., in the D.C. metro area for almost 25 years. And it seems like every couple of years, either Congress or the White House come up with a new infrastructure bill, the money's being wasted. It's being wasted or stolen. It's on port projects. It's for corporate bailouts. It's for corporate welfare or special interest groups, other pet projects. The money's not being used properly on the infrastructure to fix or upgrade those bridges, those roads, those things that prevent, that make our economy better, Americans' lives better, or even prevent people from dying, like a collapse in that Baltimore bridge recently.
Yeah, it's one of many, many issues right now, my friend.
Well, I mean, like the major problem now is you have the government entities are so large, they're projected to spend, I think, $8 trillion of fiscal spending for 2025. That's the federal government. That's not counting, I think, all levels of the government, and that's not even accounting for a higher interest payment on the debt. So that's $8 trillion of spending, and you said they're only going to take in about 5 trillion in tax receipts. So that's the
Yeah.
real deficit then is closer to 3 trillion. I guess that money is being hidden off balance sheet by the Federal Reserve Bank or the Treasury.
Yeah, it's not a pretty picture.
Well, I mean, like for the people who are saying like deflation, deflation, maybe deflation for a short time. I mean, it seems like all these fiat currencies and the debt is being debased, and they're creating new currency to buy this debt and the bond, so everything doesn't collapse immediately.
So, Jason, maybe circle this date in your calendar, and if God keeps us both alive for this time next year, let's see the difference of what we now know. Almost nothing is being said or heard about the BRICs. Let's see what's being said about it after what I think is going to transpire. I think we're going to learn that they have instituted a formal new trading mechanism monetarily that will not be using the dollar. And I'll tell you why I'm pretty well certain about that. Not only have some of the foreign ministers already said that, they've even given an outline of 40% gold and 60% of their currencies. But what no one's talked, I shouldn't say that. One person in particular, the man that runs Miles Franklin, talks about it a lot. Andy.
Andy Scheckman?
Yeah, Andy Scheckman. Do you know how many countries have repatriated their gold from the United States? I was shocked when I first saw the number.
London too. I think India just wanted their gold back from London too. So you have a lot of entities that are demanding their gold back from either the US or from the LBMA, like the Bank of England or London vaults too.
Yeah, and so so why? Because they recognize that it's going to become or has become the primary key to monetary, hopefully stability for them, that it's not dollars. And then I always say this to these people that scoff at this. Let's just say I'm right or even half right. Let's just say not anywhere near as many dollars are used anymore because a lot of people are not using that system. Those dollars are still in existence. They don't go in a fire and burn up. They come back here. And when you come back here and have too much dollars chasing too few products, you have an inflation whether or not there's a strong economy or not. And like I said,
Well, look at home prices. I think that's kept home prices, caused a boom in home prices the last 20 years. There's been a lot of that foreign money, like you said, it's come here to the US and it's bought a lot of single family homes and apartment buildings and stuff.
well, the real challenge there is affordability now. The younger generation, I would say anybody basically under 50 years old, is very stretched to have to be in a home. And the problem was at the same time, while multiple dwellings have uh, been built more, rents have gone up tremendously. A family friend spoke to me about what they were just paying 5 years ago for rent in New York City and what they just been boosted up to. It's been basically doubled in 5 years with little or no wage increase.
Is that because property taxes went up, or are there other reasons besides just property tax increases?
Well, just that the availability, that's what it comes down to. But I can tell you this, the exodus, um, the thing, I'm going all over the place here, but this is important. The immigration situation, when it was happening at first, we paid little mind to it because we just turn on the TV and we see, oh, look at this poor Texas and look at all those people coming about it. And then the governor of Texas did something that really changed the immigration story. He started sending those people to other parts of the country, all these major cities that said, oh, we're sanctuary cities and we're all for the people. It's one big love fest. Well, go talk to anybody that works or in the government administration in New York City or Chicago or even smaller cities. Absolutely overrun and overwhelmed and financially strapped by it. And many of these people are not finding work or not wanting to find work. I'm sure there are some that want to work. And they are becoming a burden economically, but then it falls into the criminality that takes place. And that's the next big wave. We're seeing it now. The one thing about the internet and everything, you used to be able to keep this away from the public, but you can't now. Everybody's got a camera in their phone. Anybody can put anything online and you can see anything anywhere that's happening. And that is going to become uncontrollable. And when these groups get tired of staying in, as much as it's great, staying in a hotel and they're feeding you and all. Most people aren't want to stay that way for the next 5 years and all. And they're going to go out into a city and start demanding more. They're actually protesting, illegal immigrants forming together, being protesting, demanding more rights. It's just an amazing phenomena, and it's not going to end well.
I mean, they were getting tons of freebies too. I think what they were getting debit cards for thousands of dollars. JP Morgan was collecting billions of dollars in fees off of it, which is just ridiculous. And then they commit felonies and then they're not getting arrested for it in many cases. I think in New York City, a lot of women were getting sucker punched in the face by immigrants. It was just crazy. I was reading about that over the summer.
Well, they're crossing from the southern border. They're getting almost 2,000 in cash. And then they got smart. They found that they can go back and cross again. One young man got interviewed, said he's crossed 13 times, got over $2,000 each time.
Wow, that's like just straight up like theft. I mean, he's figured out how to game the system, but
He's entrepreneurial, not the way you want him.
he's a political entrepreneur, yeah.
But he's at least entrepreneurial.
He's well, he could if he gets a law degree, he could come work in Congress here in DC at the District of Criminals.
Well, it's sad. You brought it up before we run out of time. It's really sad that a lady like Pelosi, who's obviously getting information that we're not getting. I mean, she doesn't listen. If you see her in Congress, she's not handling this count herself. She may get information and pass it on to a financial person who makes the decision at all, but she's not sharp as a pen to know it. And yet, on both sides of the aisle, the number of stock trades that are happening, and now they even found that a Fed governor was breaking the rules and the laws. Hey, Jason, before we go, can I talk about a topic that I haven't heard a lot of people speak about that I think you would find interesting?
Sure, go ahead.
So we finally saw, many of us have been talking about it. I think you were one of them, that these employment numbers were coming out. They were phony. The Bureau of Labor Statistics should be just called BS, not BLS. And sure enough, we got finally an adjustment of almost 1 million less employment. Okay, here's the thing. Not only did this current administration use the BS of painting a better picture, Bidenomics, whatever they want to call it, but the Federal Reserve claims, and I believe them in this regard, they claimed that they depended on those numbers as well, that they didn't know them a month ahead of time, or they didn't know that they were stroked or whatever. If that's true, then they were much tighter than they had to be because the employment was not anywhere near as strong. So how do you keep trusting these numbers?
Well, also it's bad theories too, because the central banker textbook. So all the people went to similar business schools or economics programs, and the central banker textbooks say to beat inflation, they need to raise interest rates above the government inflation rate or whatever they view as the inflation rate to try to kill demand. The problem now, I think, Peter, that we're seeing it evident in a lot of small businesses, Main Street, the consumer, is that these interest rate increases and the pace the Fed raised them at is disproportionately hurt small business, which created most of the jobs, and the consumer, and now starting to break all these banks. So we're starting to see like European banks, Japanese banks, Chinese banks are all getting hurt by what the Fed did with raising interest rates. And so the Fed's like breaking the banking system outside the United States.
And the consumer, anybody that thinks inflation has only gone up 0.2 or 0.3 of 1% in the last month, and they don't count most of the things where the inflation is really ripping to people. And then they change their basket whenever they think that they can substitute something that's less costly. Again, I can go on and on with you, Jason. I'll just tell your listeners to finish that it's time to err on the side of caution. It's time to be a live chicken versus a dead duck. Less is more. Get positive cash flow. Recognize you're not going to be able to depend on the government for much, and more people are going to become more dependent on the few of us that keep doing well, and therefore you're going to be higher taxed and feed to death. And you got to find the best ways possible to protect your cash flow.
And I think the Fed rate hikes are going to cause supply destruction for a lot of mainstream businesses, the consumer, commodity supply. So they're also not only causing demand destruction, they're going to cause supply destruction too, and total chaos. But I think all this volatility, it's going to be good in the long run for gold. There's these macro themes that you were talking about throughout the entire conversation here. I do not see these non G7 governments and central banks wanting to buy a lot of US Treasuries anymore. They are seeing the spending from both political parties in DC, and no one's talking about spending cuts. It's the opposite, in fact, Peter. So it seems like these deficits, they're going to be way over $1 trillion per year going forward. That national debt, you said 50 trillion. I mean, the next crisis, commercial real estate bailouts or something, we could be at 50 trillion in 2 or 3 years if there's a large enough banking crisis with commercial real estate.
I agree.
So this is looking. I would say this is looking good for gold because a lot of people said, okay, the gold run is over. Gold's going to crash. Gold's going back below $2,000 now with what the Fed's going to do. The inflation is dead. I don't think so. It looks like smart money is accumulating on dips. Every time the gold price, Peter, on the last like 6 to 9 months has dropped below 2,500, it looks like there's a pretty strong bid coming in.
Well, since 1300, I had a target of 25.36. We hit it. And all I tell people now is I said we'll see a price above 3 without ever going under 2.
I mean, if we go under two, I think there would be big purchases here from a lot of entities, especially out of Asia. The surprising demand picture here for the gold demand, we haven't seen strong gold and silver retail demand here in the US. It's actually been like either flat to negative the last 12 months. The big demand spike has been from Asian retail investors. So China, India, Japan, Korea, Thailand, Vietnam, those Asian countries since October of last year, 2023, that's been the huge increase in demand for retail investors for coins and bars for gold and silver.
I understand. I agree with you.
Yeah, so I really think here this is a really different supply demand picture, and the mainstream financial media won't talk about it. I think there's a quiet bull market going on that the bear market's over and we've entered like a new bull run for gold.
Oh no, we've been in the physical gold bull market. We've been in it. That's been going on for quite a while. We haven't been in a bear market in years. We had a consolidation move, but that was building out a tremendous. If you remember, we had this tremendous cup and handle formation, which 8 out of 10 times was always decided to the upside, and it did. I think where we finally seen some life is not only in the mining shares. Think about this. So gold's up 500, 600, 700, whatever the number is in a year or whatever. Uh, Major mining companies haven't seen anything close to that increase in expenses. So their positive free cash flow is going to be tremendous. And it was already strong last quarter, but now they got another quarter of this, and they're going to have several more quarters in front of them. And they're going to become titans, and they're not going to go into green fields to try to wait 10 or 12 years to develop and find something to get new ore to replace the reserves. They're going to go out to these smaller companies that have done great jobs, but have not seen the price appreciation in their stocks. There's going to be a major move. I'm speaking my book. I put a ton of money into juniors in the last 60 to 90 days, almost half of my overall wealth in them. And that's going to be the next talked about, that the ability to continue to deliver resources. You get all these guys on Wall Street that talk about all these wonderful things, AI and EV and this and that. And then when you ask them how you're going to provide the necessities in order for those things to succeed, and they say, oh, power, and they're going to be, yeah, you're going to have all these places that need power. Listen, some of our infrastructure, and I tell them half jokingly, I say some of our infrastructure and electricity was put up by Thomas Edison himself. So, so the money, so the
Well,
money,
post World War II, yeah, there's a ton of it that hasn't been updated that much since World War II.
yeah, and so all these things and the resources and all. So I think the gold and other metals will continue to do well, but I think finally the companies that explore and develop them are going to have their day in the sun.
Yeah, especially for like copper and silver, because those things are used for a lot of industrial stuff, especially electricity. And the cost to the ore grades are falling. The cost to mine those things keeps rising every couple years. I mean, it's not $10 an ounce to mine silver anymore. It's not a dollar a pound to mine copper. The grades are just atrocious for potential new projects. So you're looking at much higher price floors for these metals.
And politically and economically, it's very dangerous to be outside of a lot of jurisdictions now. We could have been at a gold show 20 or 30 years ago, spun a globe, put our finger on some country and say, yeah, we can go there and explore. No, not anymore.
Uh,
And it's going to take a price of copper at least 5 eventually in the next year or two for any major producer to go outside of a jurisdiction like somewheres in North America and risk putting a couple of $1 billion only to see like what happened in Panama and elsewhere where these countries have come and nationalized it. So,
Oh, yeah. And look at the elections the last 6 to 9 months, whether that's Mexico or Colombia, and they're electing people that are openly talking about banning open pit mining. I mean, Mexico looks like very dangerous now to invest many billions of dollars in a copper and silver mine.
well, outside of one little special situation in Ireland, I've confined my own investments to North America. So, and it's going to stay that way. Not to say that every place in North America is safe. I wouldn't put a nickel in the ground in California, but similarly, Arizona, Nevada, in Canada, Ontario, Quebec, British Columbia for good part. That's where I think the focus should be in those type of companies.
Yeah, I mean, Rick Roll has even talked about how like there's a good copper mine in with a project ready to be funded and start construction. He said next door there's two producing copper mines and they won't approve the third one. So it makes no sense. I mean, these politicians and bureaucrats, they have two producing copper mines next door and they won't approve a third one in Arizona. The permitting process for all these governments, it just doesn't make a lot of sense. They do things that are like head scratching all the time.
Well, that one that he likes to talk about, and I'm not a big fan of him, I have to tell you that, in Arizona has been an issue. In fact, the indigenous people are appealing it to the Supreme Court. This is their last chance to stop, but it's been going on for, I don't know, a decade or more. But that's just one situation. Rest of the state has had phenomenal good rapport on putting mines in and getting permits and so forth. You know, but to focus on one and say that that's going to be impacted by everybody, I think is kind of unfair. So, but by and large, the exploration game will get better because majors have a lot of needs of millions and millions of ounces or pounds of something, and it just hasn't been spent on for a decade or more. And they're not going to go and just try to first discover something on their own, develop it, get it permitted and mined 10 years from now. They're going to need that resource in the next year or two. That's why there's been a major increase in M&A in the last 60 days worldwide in the metals and mining industry.
Yeah, I agree. And thanks for the clarification about Arizona and that one specific mine. But yeah, I agree about producing miners. They have the free cash flow, like you said earlier. A lot of these producing gold miners that have copper and gold, they have at least $500 an ounce of free cash flow. So they're going to reinvest that first, like you said, in their producing mines. They're going to spend exploration drilling around the producing mine, what that's called brownfields. And then they're going to look at either expanding the existing mine or at least spending 10 million, 20 million, maybe 50 million or more on exploration drilling around the existing mine first.
Yeah, I would, there used to be a number as much as high as 93 cents on a dollar, but every dollar now that gold goes up for a major gold producer, the large percentage of that's going to fall to the bottom line. Then they don't have a big change where their industry changes every 3 months and the cost of G&A is, going through the roof because it's like a store. You have to keep changing technology and what you store and what you carry and all. So pretty well how the mine runs today is going to be running 6 months from now. And so if gold goes up another $100, you can pretty well sure $90 of that increase got to the bottom line.
Well, I want to thank you so much for your time today, Peter. If my listeners want to check out your work, are you writing a free newsletter or are you just doing a lot of these interviews lately?
I comment mostly on X page. I have an X page. I have a YouTube channel. And then there's still a blog at petergrandich.com.